So there were some interesting developments in NIO's latest quarter. NIO, of course, is the electric vehicle company based out of China and growing rapidly. One of the questions investors had for NIO in the latest quarter was that, they released their new brand Onvo at a lower price point, and there was concerns that that new model, the lower priced model from Onvo, was cannibalizing sales from NIO. And so the management team explained that, discussed that a little bit, as well as other critical strategic factors that developed in the latest quarter that's really interesting, that I think all NIO stock investors should know about. So let's check out the detail here.
I want to thank the Motley Fool for sponsoring this video. Visit fool.com/parkev for the 10 best stocks to buy now.
So one of the reasons why NIO brand sales kind of decreased, or the pace of sales decreased starting October, was that they dialed back on their expenses, and that part by reducing around 15,000 RMB per unit on the promotional cost and the marketing cost. And then that's why you saw the impact on the sales volume. Usually what happens when you're operating a company is, when you decrease spending on promotions, you decrease spending on incentive, you decrease spending on advertising, that lowers your sales. And so that's what NIO noticed from between October and the time they reported this earnings release, this earnings update, and this conference call with Wall Street analysts, which was held on November 20th. So that's why you saw some slowdown, but management did say that you saw sales stabilize after a rough patch of a few weeks there, and now they've rebounded and they're okay now. But they say that the main source of Onvo users, the majority of them actually come from the Model 3, Tesla Model 3. So these are customers that are either in the market looking for a Tesla Model 3, or customers that previously owned a Model 3 and are now changing to the Onvo brand, and that these customers are not coming from NIO brand, which is a more luxury brand, a higher priced brand. That's what management says, that only around 2% of buyers of the Onvo brand are even considering NIO as an option. So that was a little bit insightful from the management team to describe the fluctuations in sales in that way. And I always appreciate transparency from a management team. In discussing the Onvo brand, they elaborated that they believe that they're going to ramp up to 10,000 units per month in December. And that's going to be just their third full month of deliveries. They only started deliveries late September. And then they're going to ramp up to 20,000 units in March of next year. And they feel like that's a reasonable speed to ramp up. But it's less than what Wall Street was expecting. The analysts that are following NIO stock, the investors, not necessarily just Wall Street investors, worldwide investors that are following NIO stock, they were hoping for the pace to be faster. And management acknowledges this and says that it's true that this speed may not live up to some of your expectations. I know a lot of investors were very excited about this new brand coming out at the lower price point, that it was going to drive sales and the ramp was going to be much faster. But here they are, 10,000 units per month in December, and then 20,000 units per month in March of next year. It'll be interesting to see, since management is saying that the main customers are coming from Tesla Model 3, if the ramp up of these models leads to a slowdown in sales of Tesla's cars in 2025 as the Onvo brand ramps up capacity. That's something I'll be looking out for, to be sure. So they also went on to say that after the launch of the Onvo brand, for the NIO brand, their primary focus is to enhance premium brand positioning and improve product profitability. They already mentioned earlier that they started to dial back on the promotions and incentives, and for the short term it impacted their sales volume. But in the last month or so, they also saw a bounce back in momentum on their orders. So it looks like they're changing strategy here. They're no longer going to try and increase sales of Neo brand by offering promotions and discounts and incentives. They're going to let that brand generate sales organically, and they're going to focus their sales promotions on the newer brand, the Onvo brand, and offer promotions and incentives for that brand to ramp up deliveries for that model, because that's the model where consumers are more price conscious, more price sensitive. It's the lower priced brand. So these are consumers with less income, less money. And so if you offer those consumers a discount, a promotion, it's more likely to drive unit sales increases than if you offer promotions to users of the brand, luxury brand models. And so you risk reducing the perception of your brand when you're offering discounts and incentives for a luxury brand. You reduce that reputation as being a luxury brand when you're offering discounts, right? You become known as a discount brand. And so I think it's prudent to start reducing those incentives now that they've got a new brand to target the price conscious consumer. They can focus on that brand if they want to increase unit sales, to gain market share, to get people into the Neo ecosystem. And then hopefully the people that buy the Onvo brand this year, maybe 5 years later, they upgrade to a Neo with a higher price point. And so interesting developments here strategically for Neo, focusing on profitability and not so much on unit sales growth. So to support the Onvo brand, by the end of this year, they plan to have around 300 stores up and running for the Onvo brand. They will need to invest in those facilities and the stores, and they will need to keep improving their sales network and also the sales force. You need salespeople to sell these cars. The more salespeople you have, the easier it'll be to move cars, because these salespeople will be incentivized with commissions and other incentives to sell these cars. They'll be facing the customers, talking to them, giving them test drives, explaining features, influencing them to purchase these cars that they may or may not. Let's say someone is on the fence. If they talk to a salesman, they're more likely to make a purchase than if there was no salesman available. So sales staff do increase sales. In the auto industry, salespeople are one of the driving forces of increasing unit sales, and Neo not eliminating that category. They're not going the direct-to-consumer route where they're just having a website and saying, nope, we don't have any physical locations, just go to the website. They're not trying to do that. They're actually having physical locations where people can go and look at these cars and buy these cars. Hey everyone, I'm excited to announce that my book is finally available for sale. I've been working on it for more than a year now, so I'm really excited to finally share this with you now. It goes through my framework for evaluating stocks. Some of you often ask why I like this stock or why I like the other stock, and this framework provides you the things that I look at when I'm evaluating stocks. I've added the link in the description below.